So just to supplement what Sir has said, we have grown in local loans, which are loans essentially given there or to Indian companies, and also in the trade finance. Trade finance includes the supply chain and factoring, which Sir was referring. In fact, we have degrown in the external commercial borrowings because most of the corporates were basically paying back. So the growth numbers for trade were almost 26% YOY, and local loans were almost 16%. These two together, so net about 15% growth.
Ritu?
Your restructured book plus slippages, you'd given us a guidance for doing better than 2% for the full year. Given the trajectory that we've seen significant improvement in asset quality as well. What is the sort of target you have for this year? Also, credit growth at 11%, I mean, that's the kind of numbers we've been seeing across industry. Credit growth has been stronger in the fourth quarter. Going ahead with this 4.6 trillion in the pipeline, also putting together retail, what is the overall credit growth that SBI could deliver?
Normally, we don't give any kind of future scenario outlook. We don't really articulate, but nevertheless, the kind of trend which I have seen till now in the current year also, we have seen that our loan book is growing faster than the deposit book. So I think that is something which gives me some kind of a confidence that perhaps we should continue to see the kind of loan growth which we have seen in the past, both in retail as well as in corporate side also.
On the 2% target for slippages and restructuring, how significantly?
I think as far as our restructured book is concerned, it is about 30,000 odd crore, and which is actually less than 1.1% of our total loan book. And even for that also, we have adequate provisions which we have kept. In fact, I would like to mention that in our provisions, you will see a number which is almost about 7,900 crore, which was earlier the COVID-related provision, and now we have actually put it the provision for the restructured book. And the restructured book is behaving pretty well, I must mention, because when it comes to even home loans also, there we have seen a situation where people have started repaying even the restructured book, and many of them have come back to their normal schedules also. So I expect that the kind of guidance which you had given in terms of slippages to be kept in check, we should be in a position to maintain that.
Okay, well, SBI has ticked all the boxes. The issue is that this is a different beast right now, the market that is. The bank nifty, in fact, as we speak, is down 218 points. In fact, let's just spend a couple of minutes on the bank nifty because, that's the one which is clearly creating a bit of a problem. Yesterday, remember, the bank nifty was down about 1200 points, and this is after 2 days of outperformance. In fact, at one point, it looked like the bank nifty could easily be one of the indices of this week, but it's actually on the downside now. It's 3.7% down for the week is what we have. Mitesh Thakkar is joining us for last hour calls. Mitesh, good afternoon. Your thoughts on trading action and your stock calls.
Good afternoon. So I think, I've been highlighting that bank nifty will have a big breakdown on a weekly basis. I think that's where clearly the point of pressure is, and that's, the index looking weak. And I've given targets of around, 32,500 to about 30,000 next. I think those levels could be tested very soon. Having said that, I have one buy and one sell call. On the stock side, Colgate is giving a good kind of breakout in the short-term chart. So buy here with the stop at 1580 for targets of 1645. While Indus Tower has had a big breakdown, that's a sell. I think it's now 8.5% already, but that's still a sell with the stop at about 189 for targets of 168.
Yeah, Mangalam and Nigel, this just tells you, you should not actually hope for a gap in a market like this.
Yeah.
If you get a gap, that's a terrible job that you're doing because then it's a sitting duck. It's almost like a sitting duck. The hunter is waiting for you, and if you are a sitting duck over there, that's the easiest target. And the bank nifty, the kind of gap that we had, has just been sold into. And I think the vulnerable stocks, even RBL Bank and Bandhan Bank. I mean, just to give you two examples, post numbers have actually seen. Today, of course, you saw RBL Bank reacting positively, but it's off the highs, and I think Bandhan also is off the highs. And the bank nifty is now down 3 points. I tell you what, it could get really interesting if the nifty gets into the red and somehow tests yesterday's low, because if that happens, then I think that would trigger fresh algos. So looking quite ominous right now for the market.
Ominous indeed. Anuj, you did speak about the ducks and the hunter, but this time around the street would worry. What is the appetite of that hunter? Because over the last 5 or 6 trading sessions, we've lost almost 900 points on the Nifty. Things weren't looking good. Things haven't been looking good. But thereafter, the street believed that maybe some of those shorts who made a lot of money over the first few days of this week itself may cover their positions and then go home light. That isn't the case to be. I mean, it looks like a hunter with insatiable appetite, Nigel.
Well, that's right, Mangalam. But by the way, we're talking about results that are coming in there. Just take a look at HAL. That stock's moved to the high point of the day as we speak. We have only the net profit number that's looking pretty good. Fairly volatile in the last few minutes, but let's get further details. For the time being, the street has read those numbers positively, at least the net profit number. That's up close to around revenue growth mild at around 6.5% or thereabouts. But the margin performance is something that we'll have to look at. For the time being, though, the stock has spiked to the high point of the day, 2.3% higher as we speak. Dipan Mehta of Elixir Equities joins in. Dipan, SBI is the big number that's come in, but let's talk about this one that's flashing for us on the screen. There is some interest in this defense plays. We're looking at more inward-facing plays out here. HAL, any view on that stock?
Good afternoon, Nigel, and thanks for having me on your show. I think defense at this point of time is the best defensive play in the market. The likes of HAL and other defense companies are sitting on huge order book position. And they don't have these issues about compression and operating profit margins because more or less the price escalations of raw materials are passed on. And this entire trend of more and more domestic supplies to defense from domestic manufacturing, that's a very strong trend, especially considering the war in Ukraine and the impact that on defense supplies. So keeping all of that in mind, I think we could see very good numbers coming in from defense companies on a sustainable basis for many quarters. And these companies are ripe for a re-rating of their price to earnings multiple as well. In any case, I think they are great dividend yields as well. So very positive on all such companies. You got the shipbuilders also over there, Garden Reach, Mazgaon Dock. There is HAL and there is Bharat Electronics also. I think all of these companies are sitting on multi-year order book positions, which provides very good visibility to earnings.
Okay, the market's now trying to stabilize. That decline has been arrested for now. That one-way decline, even in the bank Nifty, but SBI is seeing quite a bit of decline actually. Dipan, good afternoon. Interesting, right, on SBI, because it's not as if the market went into the earnings with any elevated positions or if there was anything shocker in the number. You think it's just the market sentiment, or is there something that we may have missed?
See, I think if you look at the SBI numbers and not look at what the analysts' expectations are, then I think it was a good set of numbers on almost all parameters. And these are tough, challenging times, and you cannot just expect blue skies kind of results coming in from SBI and its other peer group companies. But nonetheless, I think very good set of numbers. It's just that banks, including SBI, are overowned. And whenever there is a selling pressure like we are seeing just now, it's the overowned stocks get punished the maximum. So I would attribute SBI's correction more to market forces rather than any internal disappointments which are there in the numbers. Overall, I think the company has recovered very well from the pandemic and is on a very strong footing. And next few quarters should be exceptional because of higher growth in net interest income and lower credit costs as well. So it's best of both worlds for SBI and other banks as well. So very positive on SBI. And this correction is more to do with overall correction taking place in the bank Nifty rather than script-specific correction.
Right, Dipan, just hang in there because a couple of stocks which are now moving. Emami is the one which came out with numbers, flat volume growth. The EBITDA margins compressed a tad bit. The net profit, of course, was optically higher on account of a tax credit. But now that stock's reacting on the obverse side, down almost 5.5% at the low point of trade. And on the other side, we have a lot of these new business companies which are now surging. So PB Fintech, for instance, is up 16%. Zomato is making a bit of a comeback. It's up 10%. Nykaa too, at one point was up 8%. Now still holding up with gains of almost 4%. So we'll keep watching these stocks. We'll take a short break. On the other side, we'll decode the fundamentals of the market with Mrinal Singh of InCred AMC. Stay tuned.
Welcome back. Well, it's such a tricky market to trade in. The reason I say that is because we just had HAL's numbers that were flashing you on the screen. The stock initially did see an uptake. Just take a look at that stock. Now it's moved to the low point of the day. It's lost close to around 6% from the day's high. So slam dunk being seen on that one. The other one is GNFC. The numbers look good, the commentary was good, but it's a it's a commoditized base play. The TDI prices are down by close to around 10% odd. It's down 8.5% today, and for this week it's lost 23% of its market capitalization. Remember, the street was very gungo on some of these names, but difficult market actually to trade in. We're still in conversation with Dipan Mehta. Dipan, the other number that we got was Escorts. They just came out. Well, there was an open offer that got closed out. What's your take on the stock at around 1550 odd? It's corrected from around the 1900 odd mark.
I think our view on Escorts is slightly bearish. It's a single product company, and we are seeing pressure on Escorts as far as tractor sales are concerned. I think that some of the market share also they have lost to M&M. So on the whole, I think I'd like to be a bit cautious in Escorts. No doubt, I think a favorable monsoon will boost volumes, but considering the valuation, and you compare Escorts to say M&M or some of the other auto companies, then I feel that it's more on the expensive side. And no doubt change of ownership, the Japanese company, parent company should bring in new products, new technologies, maybe even export markets, but that's more into the future 2-3 years down the line. But for the present, we expect Escorts to underperform.
Okay, temporary freeze now on GNFC, by the way, 10% down on the stock. And like Nigel was pointing out, the TDI price is being down. It reacted positively to numbers, but then the worry is that the peak quarter, and it went into numbers very weak, then had those numbers, reacted 10-12% positively, and since then been on a decline. Dipan, any thoughts on GNFC? Would you buy it here?
Not really, Anuj. We are not that fans of commodity companies, and what is playing out in GNFC, we can expect to play out in some of the other commodity companies as well. And GNFC is not really a specialty chemicals company like, say, an SRF or a Aarti or some of the other new listings which we have seen. So I'd be a bit cautious. You cannot pay a very high price to earning multiple for a business like GNFC. So I would say that these corrections are not buying opportunities. And again, GNFC may go back into that long sideways movement which we have seen for the past several quarters, except for the last 2-3 quarters when the stock price had spiked up.
Weakness in the metal space also continues right now. In fact, before that, the Nifty Bank has moved to the low point of trade. Now it's down almost 320 points, sitting with a cut of almost 1%. SBI, of course, was weak, and now leading the weakness is also ICICI Bank, which is following the decline on the banking sector right now. We have ICICI Bank down 2.5%. Axis Bank too has corrected. And also, talking about the metals itself, Tata Steel, we have Vedanta as well as Hindalco, all of them at the low point of trade. Dipan, we had seen a big rally in the metal stocks. Do you think it's behind us now, the best of it?
Yes, absolutely. And, with the kind of inflation fighting measures across the board which are being taken by the central banks, it's going to have an effect on commodity prices. And with the situation in China, geopolitical situation as well, I'm very bearish on metals per se. Volumes have flattened out as we have seen in the last quarter numbers, and prices also have started correcting. So no doubt, I think they appear to be cheap optically because of the fabulous numbers they may have come out with for the March quarter, but those were the best ever realizations for the sector as a whole. So I'd be a bit cautious in metals, and I wouldn't want to get into these stock prices when they're correcting the way they are just now. I think it's better to have a slightly contrast strategy and go for the metal consumers. Could be appliance companies, could be automobiles, real estate. I think these are the companies which benefit from lower commodity prices. And we could see maybe margins improving over the next 2-3 quarters or so. And end of the day, I think volumes remain pretty strong for such consumer-facing companies.
Dipan, we'll let you go on that note today. Thanks a lot and have a good weekend. Relax a bit. I think it's been that kind of a week, right?
Absolutely.
Everyone needs the weekend. Sitting in studio, one feels that, we've grown older by 6 months or so in 1 week. It's been that kind of a week. We have Mrinal Singh now joining us, CEO and CIO at Incred AMC. Mrinal, good afternoon. Thanks a lot for joining us. The point here is that the market's seen a one-way decline, a waterfall decline, and a lot of people are now stuck with positions because even in good quality stocks, because a lot of first-timers have not seen this. They always thought that markets only go up after a 4 or 5% correction. But your thoughts on how to approach it now with the kind of decline that we've seen?
So, we are seeing a lot of changes on the landscape. So the most important one is that the risk-free rate is moving up. I mean, it is still debatable how much is the quantum and at what pace, but then generally we've seen it does have an impact on the market multiples. So, well, that's what is playing out. The stronger businesses obviously will hold on their own much better. But then having said that, there are a lot of things which are happening or changing for good as well on the ground. Now, I would say, although there is inflation around, but something like a food inflation does benefit at least a section of the rural economy. So I guess it is a time where a lot of classical traditional investing will be busy trying to pick out the stocks. There will be a lot of changes. So the winners of tomorrow, will be found today. There will be a change in leadership or pattern of growth in terms of sectors and stocks that we will see. So it's a busy time for investors. Maybe they are like us, kind of looking around for the next leg of growth, next leg of significant return generators in terms of both sectors and stocks.
Mrinal, what do you think will lead that next leg of growth? You spoke about winners of tomorrow would be found today. What are you looking at today?
So clearly, I mean, the hints and signals come from the ground in the economy. We do see something in terms of trend which are very, very strong and here to stay. For example, we are seeing increase in market share of global supply chain in manufacturing shifting towards India, and that's here to stay. So, that value chain is showing that effect. So we see that particularly in engineering good companies. We see that in forging companies, casting companies, even manufacturing of APIs in healthcare. We see a significant traction or potential in terms of valuation and business outlook in auto ancillaries selectively. Also utilities, things like, I would say mortgage, or corporate lenders. I mean, these are areas which are of significant interest, and they are, for all the concerns that prevail around, are showing very good traction. Currently, we are seeing a significant and a very improved demand scenario from export-oriented manufacturing and capex-oriented businesses, and that's a very good sign. Our economy has been lacking capacity expansion-related investments, which I would call genuine, real growth for some time now, and there are good signals in that direction now.
Hi Mrinal, Nigel on this side. Just looking at your portfolio, I like the way it's shaping up on a Friday at least. United Spirits, I think it's one of the highest in terms of your holding. I think so, 5.5%, 5.1% of this portfolio. But Mrinal, I want to ask you. I see there is some tech as well. In some of your top holdings, that's fallen off the cliff. There's going to be good earnings coming ahead. Some part of that was already discounted, but the street is betting on margins remaining under pressure and attrition staying high. Post this correction, would you look to get in?
So very interesting question, Nigel. See, margins so far, we are in the middle of the earnings season, and what we've observed till now for roughly 100 odd stocks that we've tracked that have come out with results, that we've roughly seen, across the board, there has been pressure on the margins. Somewhere lesser, somewhere higher, even in services business. That includes IT, by the way. But then few businesses have been able to pass on that along with some growth on the revenue side. Volumes have been dormant, but revenue growth, sales growth has still been encouraging. So X of financials, we've seen 15 to 18% kind of earning growth for the results that have come up till now. Actually, financials have done better than that number. SBI came today, you just saw. So IT is very interesting. IT gets clubbed with the NASDAQ-oriented businesses in US, but then at least the near-term momentum is good. The margin pressures, I think, are expected. That was visible in the last reported quarter as well. But then I would say they are in a good street. Selectively, we would consider, increasing allocation in IT, but not on a whole basket basis.
Got it, Mrinal. We'll leave it there today. Thanks a lot for joining us and have a good weekend. The Nifty, as we speak, is about to turn in the red. It just about saved it. 2 points higher is where it went to, but make no mistake, this is a very treacherous market. The Bank Nifty is already down quite a bit, 356 points down. One thing which irritates me in this market is that some people, are hell-bent on getting the bottom right. That the market's made a bottom and it will make a bottom. The market's oversold, so the market does not give you brownie point for calling the bottom right, and more money is lost in trying to find that bottom. And I'll tell you one more thing. Okay, for example, suppose today is the bottom. I don't know. It can be. Okay, right. So you bought it at 15,807, anticipating that today is the bottom. 2 days later or 3 days later, suppose you sell it 15,000, so 16,100 and say, okay, good. See, I made 300 points. On the other hand, it's okay if the market goes to 16,100, spend some time there, 3 or 4 days, and then confirms to you that, okay, the worst is over, and then perhaps you buy and ride it for a larger move, say 800 or 1,000 points. The market won't differentiate in that 300 point. That because you made that 15,800, 16,100 move, I'm giving you extra bonus point for that. This is not an appraisal system, right? Where you say, okay, okay, this is my way of thinking that you've done better, so that's why the market is very dispassionate about it. So let the market give you that verdict. The market bottoms out, you will get enough opportunities, and it's not as if the market is only for the bulls. The bears are equal players in the market. They're having their time in the sun right now. They're enjoying it. So what's wrong in that?
Yeah, the only thing both Nigel and I are not enjoying right now is the appraisal bit, Anuj. But as we speak, the Nifty is moved into the red, and it's turning out to be a horrendous Friday the 13th for the bulls, if you must, because over the last Friday the 13th, the last 5 of them, all of them ended in the green.
Yes.
And the last 5 days we were in the red, so maybe people thought that, okay, this is a trend that will accrue in today's trading session as well. The first half they would be very happy, and then the hand of horror came.
Out of all the days in this week, today will hurt more.
Yeah.
Because today they would have thought they had a bit of a hope.
Exactly.
We went all the way to around 16,100 odd, and the breadth of the market as well. In the morning it looked absolutely splendid. 7-8 stocks advancing for just one stock that was declining. They want to be together on the weekend, looks like. Pull up those lines, they're coming very, very close to each other. It's just now 2.5:1. So that as well is a bit of a worrying sign. Markets in the red, maybe the flat line as we speak. Let's see where we end.
Yeah, the Bank Nifty looks like Jason in that Friday the 13th movie, right? The villain that is. It's just, it's fallen sharply, 400 points down is what you have on the Bank Nifty. In fact, let's just look at some of the stocks and the way some of these stocks have panned out. ICICI Bank actually is putting quite a bit of pressure on the market. Just look at the intraday chart on ICICI Bank. That's at the low point of the day. Reliance has actually moved to low point of the day. Reliance is still holding in the green, but has moved to low point of the day. Axis Bank has moved to low point of the day, so that's hurting the market. HDFC Bank has moved to low point. HDFC has moved to low point of the day. So all these stocks are hurting. We'll do one thing. We'll take a break. We'll come back and we'll get you a check from the dealing rooms in D Street Chatter. And of course, the BTST calls also lined up.
Unmatched leadership.
Welcome back. Just look at a couple of stocks. Adani Green all of a sudden has moved lower. The lowest point of the day, in fact 11% down, and 5% of this has come in the last 3 minutes of trade on Adani Green. So that's a stock which has taken a bit of a tumble all of a sudden. And there are a couple of others as well. Cosmo Films should come up for you. I mean, Cosmo is a stock which has done well, of course, but today the market's punishing almost everything. The Bank Nifty, by the way, is now down 400. Time now for D Street Chatter. Nimesh is joining us. Nimesh, tell us what happened in the last 1 hour or so. What's the feedback?
Hi, Rich. Looks like it's more of the short covering rally getting fizzled out because the activity is not very high. It's a lackluster day of trade. The flows are mixed with a negative bias, but it's not very large as well from the larger FIs, and it's tilted towards the financials, and that's what it's playing out in the Nifty Bank. Since morning there was a feedback that incremental, even from these levels, there is a selling pressure in the financial names. In terms of other sectors, I guess what we are seeing is short covering rally in auto names, On the other side, the metals continue to be under pressure on the back of global risk off. I guess, it's purely a technical move. Below 16,000 levels in Nifty, technically the markets are weak, and hence you are giving up most of the gains in the mid cap and small cap as well. So technical factors playing out, but in terms of activities, lackluster, and the flows are mixed with a bit of negative bias towards financials.
Okay, all right. Nimesh, what about stock specific? What are you picking up?
So in terms of individual stocks, the first stock is Ruchi Soya. That stock is in focus today, buzzing as well. And the general anticipation is that the food business transaction should happen very soon. That announcement will be very important. So that's something to watch out for in Ruchi Soya going forward. So that's the first stock. Second stock is Tata Motors. Within the auto names, biggest F&O gainer today on the back of short covering as well as some bit of buying as well. And there was a Morgan Stanley tactical buy as well on Tata Motors today, and hence you're seeing a bit of a boom in that particular stock. So that's the second one. Third stock is Kotak Mahindra Bank. While I spoke about entire financial basket under pressure, Kotak Mahindra Bank is relatively outperforming, and that's because of large FI flow in Kotak Mahindra Bank today, and hence a bit of outperformance there. And the last stock is Elchem Labs. Multiple block deals today. The stock is under pressure, but I believe one of the domestic mutual fund, which has been in the news of late, seems to be an active seller in that stock, and hence that stock is under pressure today.
All right, Nimesh, thanks a lot for that. Meanwhile, just keep an eye out on the Adani Group stocks. Anuj spoke about Adani Green, which is down 11%. What a tear we've seen.